For months, the headlines have painted a grim picture: recession fears, inflation woes, and market uncertainty. We've been told to brace for a downturn, to expect the worst. But what if the story we've been hearing is missing the biggest piece of the puzzle? What if, beneath the surface of all this gloom, a revolution is quietly rewriting our economic future? Let's look at the facts. They're telling a story that seems almost impossible. For the last 6 quarters, the US has defied expectations. Nominal GDP hasn't just grown, it soared, clocking in at an average of 6.5%. Real GDP growth, adjusted for inflation, has been consistently positive, a far cry from the recession many predicted. I recently spoke with Dr. Evelyn Reed, a leading macroeconomist, who told me, frankly, the resilience is astonishing. Standard models based on interest rate hikes predicted a significant contraction. But the data shows a different reality. We are seeing robust consumer spending and, crucially, a labor market that refuses to break. And she's right. The jobs reports have been relentless. Millions of jobs added when forecasts called for losses. The unemployment rate has remained near historic lows for an unprecedented stretch. It's like an economic engine that just won't quit. So, what is fueling this incredible strength? What is this invisible hand pushing the economy forward when all conventional wisdom said it should be falling back? The answer is a technological tidal wave, one that's injecting hundreds of billions of dollars into the economy right now. We are talking about the artificial intelligence build-out. This isn't some far-off, futuristic concept. It's happening at a scale and speed that is staggering. At the heart of this are the hyperscalers, the giants of the tech world. Companies like Microsoft, Google, Amazon, and Meta are in an all-out race to build the infrastructure that will power the next generation of AI. They're not just spending, they are investing on a wartime footing. Think about it this way. Their combined capital expenditure is on track to exceed $200 billion this year alone. That's money flowing directly into building massive data centers, buying high-end semiconductors, and developing cutting-edge hardware. And this is just the beginning. Over the next 3 years, we are looking at a projected spend of over $600 billion. To put that into perspective, that's more than the entire GDP of many developed nations. It's a colossal injection of capital, creating jobs, and stimulating demand across a vast supply chain. I had a chance to connect with tech analyst Ben Carter on this, and his take was illuminating. He said, "This isn't just about building more servers. It's a foundational shift. Each dollar spent on a data center has a multiplier effect. It drives demand for construction, for energy, for specialized components, and for a highly skilled workforce. It's a powerful economic engine that most people can't even see." This level of investment is what's papering over the cracks in the traditional economy. While sectors sensitive to interest rates, like housing, have slowed down, this wave of AI-driven spending has created a powerful countercurrent, keeping the entire ship afloat and moving forward. It is, quite simply, the largest, fastest, and most concentrated capital expenditure cycle in history. So what does this mean for the bigger picture? For investors, for the market, for all of us? It means we are not just in another market cycle. We are witnessing a fundamental macro shift, driven by a technological leap that comes around once in a generation. Historically, the market moves in cycles. We see periods of expansion, followed by contraction, recession, and then recovery. It's a familiar clock. But every few decades, a disruptive innovation comes along that breaks this clock. Think of the internet in the late 90s. It created an entirely new paradigm, a productivity boom that reshaped the global economy. We are at that moment again. AI is the new internet. It's not just an improvement on old technology, it's a platform for entirely new industries, new efficiencies, and unprecedented productivity gains. The initial phase we are in now is the infrastructure build-out. This is the picks and shovels stage. Just like the companies that laid fiber optic cables in the 90s, the companies building the AI data centers and designing the chips are seeing explosive growth. Their stock charts are a testament to this, showing a clear decoupling from the rest of the market. But this is just stage 1. The next phase is the application layer. Once the infrastructure is in place, we will see a Cambrian explosion of AI-powered applications across every single industry. From healthcare and finance to logistics and creative arts, AI will unlock efficiencies we can barely imagine today. This is the start of a massive productivity cycle. As businesses integrate AI, their output per worker will skyrocket. This leads to higher corporate profits, which drive stock prices. It leads to higher wages, which fuels consumer spending. And it leads to lower inflation over the long term, as goods and services become cheaper to produce and deliver. This is the virtuous cycle that will define the next decade. Now, I want to touch on one more crucial element in this new landscape: Bitcoin. Why does Bitcoin matter in the age of AI? Because as our world becomes increasingly digital, the need for a truly decentralized, secure, and neutral asset becomes paramount. AI will accelerate the digitization of everything, including money. In a world run by algorithms and centralized tech platforms, Bitcoin stands apart as a global, immutable settlement layer that no single company or government controls. It's a digital store of value and a system of property rights for the internet age. As trillions of dollars in value are created and transacted by AI systems, having a trusted, programmatic monetary asset is not just a nice-to-have, it's a necessity. Think of it as the base layer of trust for a new digital economy. Its integration into this AI-driven world represents a massive, untapped growth vector. So, as we look ahead, it's time to adjust our perspective. The old economic maps may no longer apply. We are not heading into a simple recession or a typical recovery. We are at the dawn of a new productivity supercycle, powered by the twin engines of artificial intelligence and decentralized digital assets like Bitcoin. The colossal capital spending on AI is the down payment on more prosperous, more efficient, and more technologically advanced future. The opportunities that will emerge from this shift will be transformative. It's a time for forward thinking, for understanding the deep currents of change, and for positioning for the incredible growth that lies ahead. The headlines may continue to focus on the past, but the future is being built right now, one data center, one algorithm, and one block at a time. This is a story we'll be following closely in the weeks and months to come. If you found this analysis valuable, be sure to subscribe to the channel for more insights into the forces shaping our world. We appreciate you watching.